Welcome to today's Financial Markets Brief. We're going to go way beyond the headlines to really figure out what's happening out there. You've got fear, you've got paradoxes, and some really surprising trends creating a puzzle that, well, we're going to solve together.
So, let's just dive right in. The market is sending out some seriously mixed signals right now. On one hand, you can feel the fear everywhere, but on the other, gold, the ultimate safe asset, is taking a nosedive. And get this, at the same time, there's a massive gold-buying frenzy happening in China. So what is the deal? How does all this connect? Let's find out.
First up, let's just take the temperature of the market. And honestly, the reading couldn't be clearer. The mood is incredibly negative. And we're not just talking about a few people. This is from the most seasoned economists all the way down to the everyday investor.
Okay, so when a former chief economist of the IMF says something like that, people listen, and it sends shockwaves. This isn't just some wild prediction. It's a huge source of the anxiety we're all seeing, and it paints this really grim picture of long-term economic pain for pretty much everyone.
And this worry isn't just stuck in the world of high finance. Nope, it's hitting Main Street too. Right now, a full 50% of individual investors are getting ready for a downturn.
I mean, that is a huge number. Just think about it. Half of all individual investors are convinced the market is going to fall. This pessimism is so widespread that it's actually forcing professional fund managers to buy up protective options at a historically high rate. They're basically placing bets on a downturn.
But, and this is a big but, here's where things get really interesting. What if all this fear, this overwhelming negativity, isn't a sign of a coming crash at all? What if it's actually a contrarian signal for a potential rally? Let's look at this from a totally different angle.
Seriously, think about it. When was the last time the market did exactly what everyone predicted it would? History is just filled with examples of huge market reversals happening precisely when everyone agrees on one outcome. It's kind of like a crowded boat. When everybody rushes to one side, it's about to tip.
Now, check this out. On one side, you've got these super dramatic, headline-grabbing predictions about oil hitting $200 a barrel. And on the other side, you've got the reality of what the charts are actually doing, which is holding steady. This disconnect right here is a massive piece of the puzzle. So here is the crucial point. We've got a key technical level, the 200-day average, which is basically a long-term trend line for the market, and it's happening at the exact same time as this moment of extreme pessimism. Now, for contrarian investors, this is the classic setup. This is what they look for as a sign of a potential market bottom and a great buying opportunity.
All right, let's switch gears and talk about another market mystery. This one really seems to defy the basic laws of economics, the paradox of the falling price of gold. It is a fantastic question, isn't it? Gold is supposed to be the go-to asset when inflation is running hot, so why on earth, with everyone talking about soaring inflation, is its price falling off a cliff? A lot of investors are scratching their heads about this one, so let's pull back the curtain and see what's really going on.
The answer isn't just one simple thing. It's actually a fascinating chain reaction, a kind of domino effect that started in a totally different part of the market and sent ripples through the whole financial system.
And this slide just shows you how interconnected everything is. A sudden spike in oil prices meant traders who bet against oil were suddenly facing massive losses. To cover those losses, they had to sell off their winning positions, which in this case happened to be gold. It's like being forced to sell your most prized possession to pay off a sudden debt. The selling had nothing to do with inflation and everything to do with a forced fire sale.
And there's another layer to this. At the same time, some sovereign wealth funds, especially in the Gulf, are feeling a cash crunch. So they're selling off their huge gold reserves to raise money for public spending. That's another major source of selling pressure pushing the price down.
But this story has a pretty amazing twist. While some people are being forced to sell gold, there is a massive wave of buying coming from one specific part of the world. And this wave is so powerful, it's actually reshaping the entire global gold market.
Yeah, we're talking about an absolutely incredible surge in demand from Chinese citizens. The amount of buying is so intense that it's forcing local banks to take some pretty drastic measures just to handle it all.
That's the daily purchase limit Chinese banks have put on themselves, and that wasn't a government order. It's because the public demand for physical gold bars is just completely overwhelming their ability to even supply it. It is for all intents and purposes a modern-day gold rush. And this really gets to the heart of it. For these buyers, gold isn't about trying to beat inflation. It's a flight to safety. After seeing their real estate market completely collapse, there is a profound lack of trust in the official financial system.
They're turning to gold because it's tangible, it's real, it's something they can actually hold in their hands and trust.
So this leaves us with a final big question to think about. We've seen how fear can actually be a signal to buy, and how the very definition of a safe asset like gold can be turned on its head by market forces. For some, safety is a hedge against inflation. For others, it's a physical escape from a financial system they just don't believe in anymore. So, in a world of constant change and uncertainty, what does safety truly mean, and where will you find it?